Apple is once again at the center of global tech and financial conversations, but this time, not for a groundbreaking launch. Instead, investors are reacting to news that Apple's much-anticipated foldable iPhone may face delays, and the market response has been immediate. Apple shares slipped following the report, raising a bigger question for investors and tech enthusiasts alike. Is this just a temporary bump, or does it signal something deeper about Apple's innovation cycle and future growth? Welcome to PyUncut, where we break down complex tech and financial news into simple, clear insights. Let's start with the basics. Apple has been rumored to be working on a foldable iPhone for years. Competitors like Samsung, Huawei, and others have already launched multiple generations of foldable smartphones. These devices promise a hybrid experience, combining the portability of a phone with the screen size of a tablet. Naturally, expectations from Apple are extremely high. The company is known for entering markets late but redefining them with better design, usability, and ecosystem integration. However, recent reports suggest that Apple is facing technical challenges, particularly related to display durability and hinge design. Foldable devices require screens that can bend thousands of times without degrading. Even after years of development, achieving Apple's level of quality control appears to be difficult. As a result, the company may be pushing back its launch timeline. Now, why does this matter so much to investors? Because Apple is not just any tech company. It is one of the most valuable companies in the world, and its growth story is closely tied to its ability to introduce new categories or significantly upgrade existing ones. The iPhone alone contributes more than half of Apple's total revenue. So any signal that innovation in its core product line is slowing down tends to make investors nervous. The market reaction reflects this concern. When news of the delay surfaced, Apple's stock dipped. While the decline was not massive, it highlights how sensitive the stock is to future product expectations. Investors are always looking ahead, and in Apple's case, the next big thing matters a lot. To understand this better, we need to look at Apple's recent strategy. Over the past few years, Apple has shifted focus towards services and ecosystem expansion. Products like Apple Music, iCloud, Apple TV Plus, and the App Store are becoming increasingly important. These services generate recurring revenue and help Apple maintain strong profit margins. However, hardware innovation still plays a critical role in attracting new users and keeping the ecosystem growing. This is where the foldable iPhone comes in. It is not just another device. It represents a potential new upgrade cycle. If Apple successfully launches a foldable iPhone, millions of users could be encouraged to upgrade, boosting sales significantly. But if the launch is delayed, that upgrade cycle gets pushed further into the future. There is also a competitive angle here. Companies like Samsung have already established a strong presence in the foldable market. Each year, their devices improve in terms of durability, design, and usability. If Apple continues to delay, it risks falling behind in this segment. And while Apple has a loyal customer base, competition is becoming increasingly aggressive, especially in global markets. However, it is important to keep things in perspective. Apple has a history of entering markets later than competitors and still dominating them. Think about smartphones, smartwatches, or wireless earbuds. Apple was not the first in any of these categories, but it ended up becoming the market leader. So a delay does not necessarily mean failure. It could simply mean that Apple is taking more time to perfect the product. From a technical standpoint, foldable devices are incredibly complex. The display must be flexible yet durable. The hinge mechanism must be smooth and long-lasting. The software must adapt seamlessly to different screen sizes. Any weakness in these areas can lead to poor user experience, which Apple cannot afford. The company's brand is built on reliability and premium quality. Now let's talk about the broader market impact. Apple is a major component of global stock indices like the S&P 500 and NASDAQ. When Apple's stock moves, it often influences the overall market sentiment. Even a small decline in Apple shares can have ripple effects across the tech sector. Investors often see Apple as a bellwether for the entire industry. At the same time, This situation highlights a larger trend in the tech world. Innovation is becoming harder and more expensive. In the early days of smartphones, each new model brought significant improvements. But today, upgrades are more incremental. Introducing something truly new, like a foldable device, requires massive investment and carries higher risk. For investors, this creates a delicate balance. On one hand, they want companies to innovate and drive future growth. On the other hand, they want stability and consistent earnings. Apple has managed this balance well so far, but delays like this remind us that even the biggest companies face challenges. So what should investors take away from this? First, short-term stock movements based on news reports are common and often temporary. A delay in one product does not change Apple's overall business strength. The company still has a powerful ecosystem, strong cash flow, and a loyal customer base. Second, long-term investors should focus on Apple's broader strategy. The company is investing heavily in areas like artificial intelligence, augmented reality, and custom silicon. These technologies could drive the next phase of growth, even beyond foldable devices. Third, competition is intensifying. Apple can no longer rely solely on its brand strength. It needs to continue innovating to stay ahead. The foldable iPhone is one piece of that puzzle, but not the only one. Finally, this situation is a reminder that expectations play a huge role in stock valuations. Apple's stock is priced based on future growth potential. When there is uncertainty about that growth, even temporarily the stock can react. In conclusion, the reported delay of Apple's foldable iPhone has triggered a noticeable reaction in the market. But it is not a reason to panic. Instead, it offers a valuable insight into the challenges of innovation at scale. Apple is taking its time to get the product right, which aligns with its long-term approach. For investors, the key is to look beyond short-term headlines and focus on the bigger picture. Apple's journey has always been about patience, precision, and timing. And if history is any guide, the company may still surprise us when it finally enters the foldable market. This is PyUncut, helping you understand the story behind the numbers and the technology shaping our future.